Hi everyone, my name is John Mwindi, the founder of Experts Version Solutions and the creator of Personal Financial Management Program, a program that will help you understand how to manage your finances in order to achieve your financial goals. So under Personal Financial Management Program, we have 3 academies, and the first academy is called the Budgeting Academy. And under Budgeting Academy, remember, when you're talking about money, we have to understand how much money do you have? How do you make your money? And after making your money, where does your money go? So we look at understanding your income. Then after you receive your income, we look at how you spend your money, how you invest your money, and how you save the money. So, because after you get money, there's only 3 things you can do with your money. You can either spend, invest, or save. So once you get that financial literacy, that's the basic understanding of money. And also we look at income. What is your current source of income, and how can you increase your income? How can you supplement your current income? And how can you leverage on the current age, the digital era, to supplement your income? Then, after the basic financial literacy, if you're in debt, or what is the difference between good and bad debts, and if you're badly off in debt, how can you get out of debt? So we talk about debt management. So under debt management, remember, I've worked in the bank for 7 years as an advisor, as a consultant, and I've also worked in Nairobi Stock Exchange, the stockbrokers, and I understand about the investment options, most of the investment options that are out there. So I want to share with you what I know about money management and also debt management. As a banker, I've gone through things. I know I've issued loans, I've worked out credit applications, I've seen people where they go wrong. I know I have some information that I can share with you that can help you understand the world of debt better. And if you're badly off in debt, then how can you get out of debt? So this is our the second academy, where we look at the world of debt, on the debt management. Then our third academy, under the Personal Financial Management Program, we look at the investment options. Investment options. So from our first understanding on budgeting is you understand your income, how you spend money, and an introduction to investments or to investing. And now this is a very broad topic, and there are many investment options. So you're investing here, then what exactly are you investing in? How well do you understand the investment options? And that's where we go into a deep dive training on investment options, where we analyze investing in shares, investing in treasury bills, treasury bonds, money markets, unit trusts, real estates, all are covered under investment options. So that's a brief overview of the Personal Financial Management Program, and this is what we'll be taking you through. Remember, this is just a free course to introduce the topic, or the program and the academies under this Personal Financial Management Program. And today we're talking about budgeting, and our first course in the Budgeting Academy is understanding your income. So I'll be right back, and after this short break, on when we discuss understanding your income. So stay tuned. And welcome to our first course, our first academy called the Budgeting Academy. And today we're talking about understanding your income. And from a basic understanding of, if you've read this book, and it's important, if you've not read it, grab a copy and just go through that book. It's called The Rich Dad, Poor Dad by Robert Kiyosaki. This will help you understand your current source of income and how you prepare yourself for future source of income. So we have in the business community or out there, you can either make money from four sources. And the first one is called employment. And employment, or an employee, is a person who works, trades his time and energy, and gets paid at the end of the month. You have to report to work at 8 or whichever hour that you report. You have to work for a certain number of hours and for you to get paid at the end of the month. So the salaries and wages come here. Salaries and wages under the employees. So this is somebody who works using his time and energy for the money. And again, employment has a cap. It's capped at 60 years here in Kenya. So you're working from, let's say, 8 for a number of hours, and then you have a retirement age. So that's the first quadrant. It's called the employee. We're gonna look at this first, the left side of the quadrant. The other one is called the specialist or the self-employed. So these are people who also trade their time and energy to get fees. For example, we have lawyers, we have doctors. These are people, the specialists. They charge fees, they charge commissions, they charge other sell products, and most of these people get profits. And they also have to open their offices, they have to open their shops, they have to open the doors, and they have to work for a certain number of hours in a day. And also this one has like not really a retirement, but you can only work up to a certain age. After that, if you don't have a succession plan, then the business also goes down. So I'm sorry about if you're self-employed, what normally happens is if you go on leave, what happens? Business goes on leave. Do you normally go on leave? If you go on vacation, what happens? And worst, if you die, God forbid, what happens? Most of the businesses collapse before even the death of the owner. So you need to really be smart or really understand what are you doing now, your current source of income, and how can you position yourself in a way that even when that time comes, you'll also have some other sources of income. What you're talking about is, now moving to this other side, we have business owners. Business owners, these are big corporations, maybe companies with over 500 employees. These people, there's a structure, there's a culture, there's a mission, there's a vision for the business, there's a mission statement for the business. There's a culture that drives the organization. Most of these people work here. See, so there's a culture that guides the business. You can go on holiday, and actually even you can die, and the business even does not close. So business continues as usual. So they are big corporations. These people enjoy from profits. They understand the power of multiplication. These people understand that how they make profits is not them working, but they have a number of employees working for them, guided by a certain culture. They have a certain vision, they have a market, they have values to live by, and that drives the business. So the continuity of this business is guaranteed. So if you're sole proprietor, you need to think about how you can do whatever you're doing in a bigger way, how you can standardize the operations, how you can step it up, how you can have structures running, how you can have departments running, and the business to keep going. Now, this is the fourth quadrant, and it's called the investors quadrant, and this is where money is working for you. You're not putting your energy there, you're not putting your time there. What happens is, if let's say you're in employment, you can still become an investor. If you understand the budgeting concept where maybe 10% goes to your investment accounts, this creates an investment. Let me differentiate between a business and an investment. A business is where you're actively involved. You report to work, you have to work. The good thing is you can minimize the losses, you can cheer up your staff, you can try to minimize normal losses, and this way the business can make more profits. An investment is where you just put money in a vehicle or a medium or an endeavor that is able to generate more income in your absence. Let's say, for example, you want to invest in a fixed deposit. to put money in a fixed deposit or a treasury bill, what do? Most of the work that you do is only to sign the paperwork and maybe sign the transfer forms for money to be transferred from your account to the investment account. And that's it. So you only wait upon maturity is when you get your return on investment. But this is where money is working for you. You are not actively involved in making sure that there's the return on investment. Let's say, for example, you've bought shares in a company. You just buy the shares. That's the only work you do. And maybe you did it online. You just deposit money in the broker's account or stockbroker's account, log in on your platform, and you place orders to buy shares. That's it. If the share goes up, you're not there. The company has employees and they're working and they're making profits. And what you get here is the returns on your investment, which can be dividends, or maybe if it's the case for shares, you can even sell the share at a higher price than you bought the share at. It's called the capital gains. But we go into deep dive on those investment options in our third academy. So let's say you're an employee and you have investments that are generating more income to you. So what happens is you'll still have multiple sources of income that will help you even when you go on retire or you go for that retirement, you'll still have some other sources of income. If you're self-employed, yes, you can be self-employed, but the main thing is to go here. You can standardize the business or step up the operations for your self-proprietorship to become a big business. And now from this segment, it's easy for you to become an investor, a big-time investor, that your return on investments can guarantee a good life without even working. All right, that is now the cash flow quadrant. Now, after you get your money, especially, let's talk about an employee here. If so you get your money, I also would recommend you go and read this book by Robert Kiyosaki again. It's called The Cash Flow Quadrant. It's a very nice book, and I would recommend that you also get a copy and read it. Now, this is a cash flow quadrant. This is the rich dad, poor dad, your sources of income. Now, you can only do three things with your income. You can either you can do three things with your money. You can either spend, you can either save or invest. So you can either spend, save, or invest. So you can either do these three things with your money. So when your money comes in, where does your money go? It can either be spent, can be either save that money or invest. See. So and the idea is for you to make sure that most of us even don't get here. We spend all we get. So what's the secret behind spending, saving, and investing? The secret is if you're to spend, you spend wisely. You save regularly. And you invest. Become a smart investor or invest prudently. So you spend wisely. If you're good spend, if you're going to spend, you spend wisely. If you're good to save, then you should have a regular saving habit because it's discipline. It's more of habit. Money management is more of behavioral, and money, the actual figure is about 20%. An investment, you should be a smart investor or a prudent investor. Now, this is where the difference comes in: spending, saving, investing. And I'm going to take you through the cash flow quadrant, and this determines whether you become rich, you become poor, or you're just a middle class. So, over to the other book called The Cash Flow Quadrant, and it says your income here. You have your income and you have your expenses. You should be able to understand your cash flow. And you have here something we call, there's a balance sheet. You have your assets here. An asset is anything that you own and puts money back to your pocket. That's the second definition. Now, the basic definition is an asset is anything of value that you own. But with regard to you becoming a smart investor, an asset is anything that puts money back to your pocket, which is an income. And a liability is simply something you pay for, something that costs you. So that's a liability, okay? So you have your income, money comes in, yes. So let's look at the employees. So you have money comes in. Poor people, let's say for example, you're professionals, you have a good salary, but you end up being poor. Money comes in and goes out. So this is a poor person. Why? Because you understand that you're using your time and energy to create that income, but you're not creating avenues that will give you future sources of income. So you spend everything that comes in. And this is poor people buy, this is poor people buy stuff. And I like a definition of a poor people from Kithaka J, the founder of FEP, said, poor people means people who overlook opportunities repeatedly. So you don't see these opportunities, investment options. What you see is stuff. You buy stuff. So when you go to your house, with your closet, everything is just cluttered with stuff. So you're not looking at the future. So if regardless of the income that you have, which is actually money, the income you have is a seed, goes to buying stuff. Let's look at the middle income level. So middle income. Yes, they get, if you're an employee, you get your income here. Let me use a different pen here. So you have your income that goes to buy liabilities, then goes out. Let's say you buy your car and you're paying for the car, but there's also insurance, there's gas, there's wear and tear, and all of these other things that goes with that car. So what you have is you didn't actually go to spending, but there's a deduction from your account that goes to paying for the vehicle, but it's an expense. So the difference is, if you look at the amount of money going out, what you committed into buying the car and what is going out, plus the insurance, plus the wear and tear, plus the gas. So you find actually it is more, the expense becomes more than actually what went to the liability itself. Let's say, for example, you have a mortgage, and a mortgage of, let's say, 5 million, but you put down a deposit of 1 million, so you have a loan of 4 million. This is what you're paying for. So you buy the house, and this is now what costs you, because house also comes with this. So if you look at your income here and what goes out here, this is where you find most of the middle income people have credit cards and all these things, and they don't manage them well, because you find more of the expenses. It's not that they're buying stuff, but is what goes with what they buy that really squeezes the income that remains. So you have poor people buying stuff. You have middle income, or the middle class people buying, actually the middle class people buying liabilities, and you have the rich people here. Let me use another different color here. The rich people, they get a salary, yes, could be salaried, but what they buy, money comes in, they buy assets. What is an asset? An asset is anything that puts money back to your pocket. So what happens here? Still keeping your expenses expenses intact, you've created another source of income. So what you have here, you have two sources of income. Even after retirement, if you've created enough sources of income, which can, as an investor, they can generate income in your absence. You'll have more passive income that can help you even in future. So this is a basic understanding. You need to understand where you are, and you need to come to this side and be a good investor. So this is the importance. Why I've brought this is when you're doing your allocation to the saving to investment account, is very important to understand when your money comes in, you should be able to put some amount into an investment that can help you earn more income even in future, such that even if this employment is gone, you still have multiple sources of income that can sustain your life. So you need to be really careful, and if you're a poor person, then you look at what you own right now or what puts money back to your pocket. If there's nothing, then you know money comes in and goes out, and you're buying stuff, because these will not help you even in future. So why do you need to save? You need to actually plan for what you will want to spend. If it's a car, if it's you want to achieve a certain goal for your school fees for your kids and all that, you need to have a savings plan. And nowadays, you find even the savings accounts, because savings accounts in banks are actually investment accounts. They are earning interest. So, and there are still other investment options out there, but depending on your goals and objectives, which you'll also analyze deeper when you're talking about in the Investment Options Academy on how to invest and how to save. So this is a basic understanding of where your money comes in, and when you're telling you to crash your budget or to reduce your expenses, if this is where money goes, then it's high time you start establishing this. And how are you going to establish this? You need to establish this because this is what you want. You need to realize this is just to open your mind into you understanding yourself better. You understanding your income better. You understanding that there's a future and there's a way out that you can supplement. You don't just want to live on a pension, but you can create assets column that can generate more income, right? So this is more of graphical representation. I want to give you another, let me show you something. And I want to use this illustration here. Now physics, we said if there is a tank, assume this is a tank. Actually, this is a tank. This is the inlet. And this is the outlet. So, this is your income. So, this is your income. So, money comes in from either employment, from your, if you're self-employed, through your what you charge, your fees, your commissions. Money comes in, and this is your outlet. This is your outlet. Money goes to spending or expenses. There's an amount that goes to savings, and there's an amount that goes to investment. Okay, so you have your money coming in and you have your outlet here. So when your money comes in, it goes out. It goes out to expenses, goes to your savings account if you have one, or and just to introduce something on the savings account, which is our next course, is savings. Let's say an emergency fund. You need something to cushion you in case something goes bad. If you're employed and you fired or terminated, or for some reason something happens, you can survive for, let's say, 6 months before you get another job. So you have money coming in to this tank, and this goes out to expenses, which can either be basic, we'll cover this, Good. Now, if you want to fill this tank, what happens? You need to have more inlets. Or you can reduce this. But you can only reduce this to a certain expense, to a certain extent, because there are basic expenses that you have to incur. So you can't crash beyond a certain point. What is there is you can increase this. You can either start a business, let's say the online business. Like right now, I'm a banker, but during my time, I'm shooting this video. This is a career, and I'm doing it I'm doing this online. I'm positioning. I package this stuff. Now you're watching my video. Maybe at the time you're watching this video, I'm at the bank serving a customer. This is just an income. You can create products online. You can. I'll show you how you can start your business and create multiple sources of income or another source of income that can help you either accelerate your investments or directly add your income. So money comes in. If you're salaried, you have your wages or income. If you're self-employed, you have commissions. You have your fees that you charge comes in. So money comes in. So it has to either go out through expenses, savings, or investing. So in most cases, what happens is money goes to savings, to expenses, which can either be basic or secondary. Goes to your savings account or goes to investments. So whatever goes to investment here, create another source of income here, see. So that way, you're able to increase your inlet. And this is the basic understanding. Now, the worst thing that is happening with the middle income. So the poor people, money comes in, goes to expenses. The middle income, this is where you have your credit card. You're using what you've not earned. And also, there's something called a salary advance. And what happens is for salary advance, you try to get money from here. This is a salary advance. So what you're doing is you're siphoning this level, below this level. And you can bear me witness, if you siphon water from here and because you get a salary advance, not to go to a savings account or go to an investment account, you pull this money, you siphon this income here, which goes to your expenses. So what you've done, you've not generated another income that will offset the position, but now the following month, money comes in as your salary and first offsets this deficit. And whatever remains at times is not even sufficient to meet your expenses. So you pay half of the expenses and then you go to the salary advance, and this is costly. I've seen people going to Shylocks at 20% per month. I've seen people, even banks charge 4, 5%, even 10%. And this is for only 2 weeks because you've applied for the salary advance on the 15th and 30th your salary is coming. So you can imagine somebody hitting you hard at 10% on of your income to go to your expenses, and you can't even save that percentage. You don't have a saving plan that you can save even that 10% or even the 20%. So that's a dangerous move. And if it becomes a lifestyle, then you're a poor person. You'll end up being poor because you'll not have money to do your investments that will help you increase this inlet. So what do you get from this? One, for you to fill this tank or to have more water retained in this account, this tank, is to increase. You either increase the inlet, and how can you do that? You can start a business to supplement your income, or you can manage your income wisely and create your investment columns that will supplement your income. So what happens? You have the normal way how your money has been going. And if you're a poor person, money has been coming and going to expenses. If you're terminated, what happens? You're done. You're done. So you have a chance right now. You have a chance. Today I just decided to have to shoot this free training video for you so that you can understand your income. You can understand how your money comes in, how your money goes out. Do you want to be poor? Do you want to be a middle class? Or do you want to become an investor? I've given you this illustration here just to make you understand this language or this concept of money so that you'll be able to make decisions. And I'm going to show you, because I know this is where managing expenses and also your savings and investments today is just introducing about you understanding your income. And I think that serves you. So next, we're going to talk about how to manage your expenses and savings and also the investments. So stay tuned, because I'm going to show you how do you become a regular saver? How do you make sure that you're able to meet your savings goals? Spending. How do you make sure that you're able to pay your bills on time and you don't go through these channels that are expensive for you for no good reason? And how do you start up your investments? And that will wrap up our first academy, the budgeting academy. And now when you be discussing about if you're in debt, how you get out of debt, you'll be able to understand, is your money being going to your expenses? Is it that you're going into debt because you don't have an emergency fund, something comes to you and you have to borrow? Is it that how can you supplement your income through investment? So today is just to open your mind and set you into a pace that you're able to understand your current source of income and start thinking about your future and what opportunities are there that I can use to supplement my current income. So thank you for watching and listening to what I have to share and my experiences, and I hope it serves you. So post your comments below. Let me know what you think about it. And also, till next time, God bless you.